Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. His website, CanadianInsider.com, home of the Canadian Insider Club. Welcome back to the show, Ted.
Jim, thanks for having me back, and thank you to everyone listening in.
Now, because of the flooding situation in the Fraser Valley just east of Vancouver, rail line shipments, highways are still cut off. Supply chain issues are very real in Western Canada. Asian specialty stores can't get any product from China or Japan or Korea right now. Will these supply chain issues continue into the new year, even once they get some of these roads? And we're told some of the highways may take months to repair, because if you can think of freeway flyovers in your local city being destroyed for about a 1 mile stretch and how long that would take to replace, that's the situation here in mountainous British Columbia.
Well, we'll have to see. I'm not a regional logistics expert by any stretch of the imagination, but it just strikes me as just another sequence of circumstances that we're having to get used to, right? I mean, we're used to mask mandates now, and in BC, we've got a vaccine, passport mandates, and now we're going to have to get used to maybe not seeing everything we've been accustomed to at the shelf. I mean, I just went today and got some milk at one of the larger retailers, and there was some there, but there wasn't a lot. And I was fortunate enough to get one with a decent date, but it wasn't like it was in the past. It was it was, I would say, it was about half full. So I mean, that's just my experience today. It'll probably be different next time I go. But I think what we have to plan for is that, just like in the markets, I think we're in a bull market in volatility. Locally, we're in for some unpredictable times. We just have to kind of get used. We will get used to it. We've Jim, everyone's adapted to the realities of COVID, and now with the we had the summer heat wave, and now we have the great washout of 2021, and it takes time. I think everyone understands it takes time to clean up, and let's hope it gets back to normal in the new year as soon as possible. We will see.
Now, as you mentioned in our little pre-interview before we went to air, tricky times ahead. Well, 2021 has been one of the trickiest years ever outside of wartime. So how do you trade or look at certain commodities or items or financial assets to trade or invest in tricky times?
Well, these are particularly tricky times for the Federal Reserve and central banks around the world, because they've made this bed of debt, and now they're lying in it. And the problem is, the inflation nightmare is impacting what could have been a restful sleep, where they could just kind of continue doing what they're doing, and nice kind of relaxing unfolding and normalization of monetary policy, however one wants to define that. But instead, now we have the inflation, these inflation scares. So that has really raised the stakes for central banks getting it right. And kind of look at it as a tricky smile. We wrote about this in our gold our mining and crypto report that we published just today, and today being Tuesday, the day of the interview. And what we characterize the times ahead for hard asset investors as follows. There's a sort of Fed smile we've got, and in the middle of the smile, you've got a really nice period where you would have the Fed getting it right, that they're able to sort of not raise rates or too much, maybe some symbolic rate hikes, and everything would be fine. Under those circumstances, we think industrial metals will be off to the races, crypto off to the races. That's a really good environment for more sort of riskier, economy sensitive or riskier type plays. And that would be, I think, the outcome the Fed is shooting for, that it gets it just about right? So that's kind of like right in the middle of the smile. The Fed manages to pull it off. Okay. So, but what about at the, tips of the smile? Well, this is a different story. On the left side, you've got the Fed moving too quickly and raising rates faster and more aggressively than the economy can handle, a la 2018. And on the other side of the smile, on the right side of the smile, you've got Fed pulling it, waiting too long, dragging its feet too long, letting inflation rip, and then, too much of a good thing, and then the Fed is forced to really tighten. And the problem at both ends of the smile, you've got the risk of recession, and that is where gold could do very well. And, so I looked just before the show here, I looked at how gold behaved in 2018. That is the last great Fed cycle. And interesting, when you compare, we do a lot of comparisons of gold and Bitcoin, in the market these days. And back in 2018, Bitcoin was the first to peak once the Fed started raising rates again. But the rest of the market didn't really react, and everyone thought, it's just Bitcoin, it's just that crazy thing, it's nothing to see, move along. Anyway, as the Fed kept raising rates, at some point, it's really started to matter. I mean, I remember writing a piece in the summer of 2018, said the bomb might explode without any warning. And, as it turned out, when the Fed met at its September meeting of that year, they raised rates that year. At that point, gold started to outperform the S&P 500. And that meeting was on September 26, 2018, and the Fed raised rates to 2.25%. That's what it took for gold to get to that part of the smile, that left part of the smile that is really the Fed is overdoing it. And this it surprised me when I saw this, but gold continued to outperform the S&P 500 all the way until basically summer of this year, based off of that end date. I mean, you pick these end dates, you can get all sorts of different outcomes. But why I think that's really relevant now is that I'm not saying that gold is going to start outperforming the S&P 500 now, not at all. But what we have to be mindful of is it's tricky times for the Fed, and their magic trick of pulling the rabbit out of the hat may turn out to be a flop, and they may get it wrong. And they may tighten too quickly in 2022. And if that's the case, that would be the kind of setup that would be favorable to gold, in our view. And, the fact of the matter is, based off insider signals, they're bullish on both gold miners and these, specialty industrial miners, battery metal miners, industrial miners. So, the insiders in both camps are bullish, because I think, the upside, depending on where on the smile you are for both camps, is pretty good. The problem is, I think, if the Fed does manage to pull that rabbit out of the hat, gold bulls will be frustrated again that, gold will do okay in an inflationary, quasi-inflationary environment. But, all the action will probably be seen elsewhere. However, if we get to the point where the Fed is overdoing it, gold could be like one of those last assets standing. So, you've got, it's tricky times, and we'll see who's smiling at the, a year from now. But unfortunately, it's going to depend on the Fed. They've been such an important part of the game, as you know, as all your listeners know, for the past decade plus. They've raised the stakes by all their experimental monetary policy, and now inflation has come and has really upset their calm, sort of deep sleep, monetary deep sleep. No more. There's some real tricky issues for them to maneuver, and we saw Jerome Powell tried to do that on Tuesday. Didn't well. If he wanted to flatten the yield curve, he did a great job. Then we saw big volatility. We saw a big jump in the 2-year yield. We saw like the 30-year yield fall further. It looks like bond yields have peaked for the time being. I never say never in this game, but it's like with the threat of the Fed threatening to choke off the economy's recovery to fight inflation. That is, the bond market is sniffing a big problem with that, and if the Fed falls through. So today, I think, was a right end of the smile day. And even though, I don't know if gold went up today or not, but I'm sure it on a relative basis, I'm not sure, I'm pretty positive, I'm just checking here, but I believe it outperformed. And, it's this kind of environment in any event that we would expect gold to do relatively well compared to other risky assets like, copper and oil and really economy sensitive assets. So I would chalk up today as a good gold day, but a good gold day when the Fed is potentially overdoing it is not a good day for a lot of economy sensitive stocks. So tricky times ahead, Jim, tricky times.
When the Fed was invented back in 1913, I believe, they said the reason for it was to prevent recessions. While our market historian Bob Hoy points out there have been at least 18 recessions since the Fed was invented. So they haven't done a very good job of what they said their job would be. Well, it's like many government initiatives, public initiatives. The initial intentions are fine and dandy. We needed a lender of last resort. Well, that's fine. But now, the lender of last resort, we saw what that amounted to in the spring of 2020. It was the, bond buyer of last resort, debt monetizer of last resort. I mean, it's taken to an extreme. And in terms of its, management of monetary policy, for a decade, it was the only game in town. The last decade, because there was no fiscal policy to speak of out of the U.S. anyway. And now we've got a much different situation where all that easy money for the past decade has now been combined with lots of fiscal policy. So the Fed now has to really prove itself again. Yet, there's still a lot of believers out there in the Fed. Mostly it's amongst the professional money management crowd. It's just easy for them to write research reports, basically assuming the Fed is going to, what the Fed says they're going to do, and what they're going to do is going to work. I mean, that's the path of least resistance on Wall Street. And no one's going to fire you or put you, into, the crazy corner if you just, toe the party line. And that's, typically what happens with a lot of these mainstream research reports. So, but right now, we'll see if the mainstream gets its way, and that would be the bottom of the smile. Or whether the Fed makes a mess of things, and just like they did in December 2018. So, except I think the damage this time will be bigger if they mess up. We'll have more with Ted Dixon right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, so many companies made record profits over the last quarter, and many have announced they plan to buy back shares with those profits. Well, if they made a massive profit, why don't they hold on to that cash if we expect tough times ahead? Or are they just expecting more government bailouts to keep them afloat? So why save your cash for a rainy day when you can use it to buy back shares and essentially manipulate the price?
Well, I think a lot of it can be answered by the fact that nobody can get a decent yield as a corporate treasurer without taking lots of risks. So you've got all this cash sitting on your balance sheet. Now, some companies are putting it into Bitcoin. That's very courageous if they have the investment mandate to do that, if they can do that. And, I think there is a case for that. And there's also opportunities in decentralized finance that are becoming more and more available to institutions. It's going to, over the next 3 years, it's going to get harder and harder for fiduciaries to just say, "Oh, we can't invest in Bitcoin, or we can't invest in Ethereum, or pick your Cardano or whatever one, Solana. You can't invest in those because it's too risky, and you don't. Well, yeah, maybe, but now the fact of the matter is these tokens, you can get a yield in decentralized finance by staking them, and so the whole sort of idea that you could, that you can only, your only choice as a treasurer is to put them in treasury bills that are a quarter percentage point yield. That's kind of going to go by the wayside, I think, especially if the Fed starts to raise rates. But at this point, though, I mean, I can understand why corporate treasurers can't move into DeFi, and at this point it's still a bit early. Although if you really tried, you would find there are the abilities are changing quite rapidly. I know in Canada, for example, Fidelity announced an institutional custody service. I think it's the first one. So it's starting to open up, and so this sort of knee jerk, we can't invest in crypto because it's too risky. But that's not going to cut it for much longer. And look, a treasurer could look at it and say, "No, this is too risky. And here's the yield we get, and here's all the risks. And on balance, we don't think it's a good investment." That's fine. If you go through the process, you weigh the pros and cons, and you come to a conclusion. There's nothing wrong with that. But if you don't go through the process and take a look at it, you're not really doing your shareholders, or if you're investment manager, you're not really doing your investment clients, a favor. Now, I should say, of course, some investment managers cannot do that. I mean, they're just not allowed by regulation. So they're kind of, even if they want to, they can't. So it's not black and white. And again, you've got regulators, out there trying to, in the name of protecting the little guy, really are just protecting the status quo and not wanting to see many changes, because there's all sorts of implications if you start letting the financial system evolve, and so the natural tendency from some of these regulatory bodies is to slow it down to benefit the status quo. So so the status quo, what's the status quo? Share buybacks. That was the big flavor last decade. Given the hostility we've seen in the United States to crypto, and and the conservatism we have in Canada just towards things like that, it's not surprising that we're going to this. And but it also, and probably the bigger signal that this is sending is that these corporate treasurers and boards don't see a lot of growth opportunities to reinvest in. So you see how the bond market's reacting now. With Jerome Powell, what he said today, even though it's 6%, what do we got? 6%, 5% inflation, pick your number. You've got sub 2% bond yields on the long end. It really is a nutty world, the financial world that we live in. And so, it's not surprising to see some of these companies wanting to buy back their shares, and you can't really blame them if that's how they're looking at it. It's just like we don't have the growth opportunities, and, having it sit here on our balance sheet earning nothing, we think our shareholders can probably do better than that. And like you said, if there is a real problem, well, the Fed will come in and buy their junk bonds anyways. So, why hold on to your cash, right? If Uncle Sam's going to be there for you and in your time of need, even if you don't need it, he'll be there, to buy your bonds. Why not buy back your shares? I mean, I think they're just acting like rational agents, sounds to me.
Was El Salvador right to adopt Bitcoin as one of its official currencies?
Well, I personally, I'm very impressed with what they've done and the moves they've made, and the mere fact that you've got so many global financial institutions such as the IMF up in arms over it, leads me to believe they're onto something. But look, what's the big deal? Like, they're a small country, they're trying this out. Like, why don't you support them? Like, instead of the IMF and other bodies taking a hostile approach, why don't you say, well, this is interesting. We'll work with you to see how it works out. Maybe this will be good. Maybe this will work out okay. But, there's obviously some other agendas underneath the surface. So, I wish them well. I hope it works out for them. It is a bold move for sure. But, look, they're making great strides in terms of adoption, people being able to use digital currencies. And, he's got this bond issue, the president's got this bond issue that they're trying to launch. We'll see. If he's able to pull that one off, I think some other countries in their similar shape will start to take note. So it is one to keep our eye on, and it's by no means, a guaranteed success. It's risky, but so what? It's risky, but, if that's what the people are comfortable with, taking a risk as a nation, well, there's nothing wrong with that. And what's the alternative? Sit there and be told what to do by the IMF? Well, is that risky? Well, you know what you're going to get, and I think they've decided we don't want that. We don't want what's coming. So, it's inspiring, if nothing else, to see what they're doing, and I do, I wish them well. We'll be watching it very closely.
Mm-hmm. And El Salvador, of course, as the Bitcoin market fell, they bought more Bitcoins, feeling buy the dips. That's what the investment advice has been for the last couple of years. Right,
buy the dips so long as it's the QQQ or the SPY, right? That's but if you're buying some other dip, then maybe that's not what the mantra had in mind. I mean, it won't. Certainly, buying the Bitcoin dip will not enrich Wall Street, and so there is probably something there. But look, the president Bukele, he. I mean, you got to hand it to the guy, right? Like when they rolled out their wallet, there were some problems, and he was like on the help desk, working, trying to help things out. Like that's my kind of guy, right? Like when do we get politicians like that who are like arms up and are there on the job, putting their reputations on the line. Like this guy's put his reputation on the line. He's not fudging around and saying, we made, committee decision, blah, blah, blah. No, this is his, he's wearing this, and, good for him. Like he's taking a stand. He's saying, this is good for my country. This is where I want to go. When's the last time we've had a politician say that in Canada? Boldly, like this is really good for my country. Here's where I want to take us. Yeah, we have these debates around the edges, carbon tax, no carbon tax, sure, right? But those are all just sort of, no one, it all gets lost in the weeds. No one's got, no one has staked out any kind of bold agenda in Canada. Well, maybe, because politicians feel that we don't want it, which is fair enough. But look, maybe people of El Salvador, this is what they want, right? Like good, so good luck to them. And they're not, not hurting anybody doing this. Like they're not, they're challenging the status quo. Well, it's good, and to see some of these American-based institutions freak out, and I guess you could call the IMF European-based if you want to, but basically they're both Washington-based, I believe, and the OECD, this, I guess, is European-based, but the IMF and and World Bank, based in Washington. U.S. has a lot of influence in them. They're not the only ones, of course, but, Western, we'll call them Western. I don't have to single out the U.S. They hear, Western institutions, get all worked up because this small country has decided to try something different. It's just a bit much. It's just a bit much. So,
well, I believe El Salvador too is one of those countries where there's mass emigration, and they're all headed to the Mexican-American border. If that country can get an economy that's fired up, and if it takes Bitcoin to do it, that's going to help solve that problem at the U.S.-Mexican border, and to a lesser extent, the U.S.-Quebec border.
Well, no kidding, right? Like, if you have young people who see they have a future in El Salvador, maybe they'll stay and learn to program a computer, right? So, give the guy a break, and when I see all the stuff he's taken, it's just amazing. But look at these Western governments, Jim. Look, we had the Omicron virus, right? It was announced over Thanksgiving. What do we get? We get instant panic from the UK. Shuts down air travel to foreigners who visited, Southern Africa. Well, wait a minute. First of all, you're penalizing South Africa for actually doing their job, letting the world know about this variant. The first thing you do is you kick them in the head, saying, "Okay, bad guys, you're not allowed to come to my country." Okay, well, don't, and you throw Canada in the mix because we followed too. We followed in the same suit. Well, don't we have testing now? Don't we have quarantines? Look, I was all in favor of travel restrictions, closing shutting down securing the borders, not necessarily, but securing the borders very tightly a year and a half ago, in February 2020, when we didn't have vaccines, we didn't have testing, we didn't have the capabilities at the border. Yeah, that was the time to panic. Not now. We should have a game plan, right? We've been at this for a year and a half. Variants, this isn't the first variant, right? And it isn't the first strange variant. We already are dealing with Delta. So what was the whole idea of this panic on right after Thanksgiving? Well, it sure sent the oil price down. Well, I can think of one politician that benefited from that. But, what's conspiracy theories aside, and I'm joking about that, but what's the point of panicking? Aren't we past that? Haven't these governments got their act together where they can deal with a new variant without kicking the country that sends a message? Oh, and by the way, now that there are cases in Europe, why aren't we banning people from Europe to come to Canada? Huh?
Well, there's cases now in BC, Ontario, and Quebec. Why aren't we banning BC from BC?
Well, why, what's going on, right? What was this knee-jerk reaction of shutting out travelers from Southern Africa? I was embarrassed. I was embarrassed that Canada went along with that. And look, if you're going to shut down travel, you got to do what Israel did, and you close it to everyone, and that's fair. And, if that's your solution, right? Not my solution, but if that, there's a case for it, and I respect any country that decides that that's the way to go. But, I would have hoped by now that our federal government has its act together at the border where it can test people. It can say, okay, you're coming from this area. Your treatment is you get a special test. You have to quarantine. And you have to quarantine this hotel until you clear. But that's, because you're from a high risk area. Look, we should have that in place. We didn't even have a list of countries that had COVID in February 2020, right? 2020. We didn't have a list. Okay. Now, somebody, South Africa, the scientists, God bless them, they alert us to this variant. Well, the first thing we do is, we basically penalize them. That's going to do more public health harm by now incentivizing other countries to keep their mouths shut if they come across a variant. So congratulations, Boris Johnson. Congratulations, Justin Trudeau. Congratulations, Joe Biden, right? You've just kind of unraveled any kind of potentially unraveled, another thread of international cooperation in putting this, getting past or managing this virus. So, but I think people, I think the reaction, I'm not the only one that's had this reaction. A lot of medical leaders have had this reaction, and in the United States as well, and some that carry a lot of weight that were appalled by this move. I would hope that this signifies peak COVID panic. Okay, and I'm hoping that now governments will calm down. We have measures in place, whether we like them or not. There's measures in place. Can we please put them to work? And if they're not working, then let's be clear and say, oh, you know what? We have to do something else differently because this isn't working. We tried this and it didn't work, right? So we should be managing this. We shouldn't be we shouldn't be shutting down the tourism industry on every random kind of news flow of a new variant, right? Yes, the tourism industry is already paying a huge price, and they're going to have to continue to pay some sort of a price until we get this completely under control. Unfortunately, but to add extra burdens on them at the spur of the moment, when it's not necessary, and in my view, it was just not meant. This panic was not necessary, and governments need to calm down, and they need to provide. If governments cannot provide a framework, right, for managing this. Are you surprised you have vaccine hesitancy? Are you surprised you have, you have platforms of people who, get a listen, who say, don't take your vaccine or don't put on your mask. Well, if governments don't look like they've got things under control and have a believable framework, well, you're just sowing the seeds for ineffectiveness in how you're combating things. And anyway, we just had a peak. I hope this is peak panic, Jim. I think it could be. I think we could be entering a new era. It's going to be tricky though, because of what we talked about at the beginning of the show. We got a Fed now that has to think about how we deal with this inflation problem, and it's going to have big implications for what assets work in the future and what assets may get penalized if the Fed starts making policy errors along the way, which we know from very modern history, only back 3 years, they're quite capable of doing.
Ted, thank you so much for chatting with us.
Jim, thanks for having me back, and thanks for everyone again listening in.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@howstreet.com. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.